Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we are looking for an expanding flat to the downside where we can eventually still expect a wave C, which is an impulse to the downside in 5 waves, where the most common target for wave C is between the two 1.618 sitting between 23.9k and 18.6k. Now for a wave B, the most common target is between the 1.38 to the 1.236 taken from the high to the low, which is sitting between 34.5k and 33.5k, with a less common target, but a target nonetheless, being the 1.618, which is sitting at 36.1k. And that is interesting because around that 36k level, we do have additional resistance, as you can see, between 35.9 and 36.2k. Now in this scenario, the move towards the upside in a wave B has to be a 3-wave structure, and the 3-wave structure that is matching a wave B in an expanding flat is an ABC structure, where we then have an expanding diagonal in a wave A, 1, 2, 3, 4, 5, for then a wave B retracing to the 0.382 taken from the low to the high of wave A, which is a common target for a wave B, and then we're looking for a wave C to the upside. A wave C, of course, needs 5 waves as well, where then we have potentially a wave 1 and 2, 3, now working on a wave 4, for then a wave 5 to the upside, where the highest target for a wave C is the 1.618, which is sitting at 36.4k, and the most common target is where price is at the moment. After the high of a wave C, you then want to see that impulsive move towards the downside. In the bullish scenario, this is your low and you're going to be looking for price to move towards the upside. A double 1-2 over here for now, price being in a bigger wave 3 to the upside. Now wave 3 has to be the strongest, most impulsive wave in a impulsive structure. And as you can see, volume did increase after the blue wave 2 was in, and that's what you want to see. However, we also like to see continuation, and price has been ranging for quite a long time already, where potentially the high of wave 3 is in or soon in, because the 3.618 is hovering at 36k, which is an interesting target for the high of wave 3, because price is currently ranging on top of the 2.618, and if price does pass the 2.618, probabilities are higher to go to the 3.618 as the next target for potentially the high of a wave 3, and around 36k we also have additional resistance. For a wave 4, we are looking for a retracement between the 0.5 and the 236, which is between 33.1k and 30.8k, but the retracement also has to take preferably at least around 9 days, because the blue wave 2 was about 9 days in time. Usually a wave 4 is longer in time than a wave 2. So preferably you're going to continue ranging for a longer period of time. The weekend is coming up. Usually the weekend is a ranging environment, so we might be able to add up 2 more days to this range, and then we're going to see where we are on Sunday. And the invalidation for this scenario would be for price to move to the downside and hit the invalidation here at 29.8k. If we then zoom in to this range over here, today has been an incredibly boring day, but maybe we still get a little bit of a kick before the weekend to get a bit of a move potentially to the downside in this particular scenario, where if we do get a move before the weekend hits, then I want it to hit before 10 p.m. Central European time. Most commonly that's the case because at 10 p.m. Central European time, New York market closes and then all the markets are closed and then the weekend hits. Of course, last weekend was quite volatile with some news related stuff, but usually the weekend is very rangy, so preferably the bigger moves happen before the weekend hit. Now in this particular scenario, we're looking for a regular flat, 3-wave A, 3-wave B, and then a 5-wave C, where we have a wave 1, 2, 3, sideways 4, and we're then going to be looking for a wave 5 to the downside, where we have the double bottom over here as well, which is always a magnet for price. We also definitely have a double top, but we got some divergences building, which I'll show you in a second, for a wave 4, so inside wave C, 1, 2, 3, 4, and then a wave 5. For a wave 4, the 0.5 is the maximum target, which has been hit over here, and from that moment onwards, price has been incredibly sideways. Definitely looks like a complex structure. Not really happy to label this as a triangle because the subwaves don't add up for me. me, as 4 out of the 5 waves in a triangle have to be a zigzag structure, and I'm not too happy with how the waves have formed, so I prefer this to be a complex WXY sideways structure, which is common for a wave 4 as well, where you then expect a wave 5 to the downside, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which is between 33.3k and 32.8k. And then you'd likely also fill this wick, which is an inefficiency that I have on my chart, as many other charts do not have this wick, which would be nice as well. Now for support in this area, you have a 1 hour order block over here, but already has been touched once. But what's also interesting is we have this low, the key level at 32.5k, including a 1 hour gap, because if I would go to the 1 hour chart, then you can see that below this low over here there is not too much structure on the 1 hour. Now the first time you would test the high of a gap, it very often, by far highest probability, acts as support, and in this scenario you want price to get away from the gap. If price would come back and starts to close candles inside the gap, the probabilities are very high, you're gonna fill the gap and move towards the downside over here at 31.6k, which of course would be past a wave C target. Now after this wave C, you would then expect a bounce once more towards the upside to then continue the trend to at least take the highs over here. The highest probability at the moment is for price to still take these highs eventually. More locally though, probabilities are a bit higher for price to move down, but overall when you look at the range, this looks very, very corrective. Typical wave 4 behavior, which increases the probabilities that these highs are going to be tagged at least once more, and potentially we would then be moving, at least high probability if we take these highs, we would be moving towards that 36k area where we have some nice resistance as well. Now, if we look at the more bullish scenario, the more bullish scenario is a triangle scenario, but I'm not completely happy with the triangle scenario over here, which mainly has to do with the subwave structure of this wave B. It is currently still a scenario I do keep my eye on, also because of the unclarity, I suppose, locally over here, where there's a lot of stuff happening, but at the same time nothing. But from an Elliott Wave point of view, it's incredibly complex, where at least this scenario has to be taken into account. If this is over here a wave A, long B and a C, even though the probabilities are not on the side of this happening. But also in this wave B, this can be a nice zigzag. In a wave A, as mentioned earlier, 4 out of the 5 waves have to be a zigzag structure. If one of the waves is not a zigzag, it's usually C, D or E, but then it is, still a zigzag. C and D are then double or triple zigzags, and E can be a triangle by itself. The problem is this can be a nice ABC, finished, wave A in, but then for wave B in an ABC structure, wave B is not allowed to take the low of wave A in a zigzag over here. And I have that inefficiency, that wick. And even though other charts might not have it, I still don't like it on my chart. So it does lower the probabilities for me that this is a triangle structure. Now after this B, you're then looking for this to be a wave C, where wave C is very, very, very long compared to wave A. Now yes, wave C's tend to be longer than a wave A, but this is very long and also quite extended for a wave C, compared to a very, very short wave A. That's something to take into account. Doesn't invalidate it, lowers the probabilities a little bit. Now in this particular range for D, then we are looking at this to be a 5-wave move to the upside, 1, 2, 3, 4, 5, right? Which can be counted nicely on the lower time frames over here, a 5-wave structure. And this is where then the range starts for potentially over here a W in a flat. Then you have a wave X for a zigzag in a wave Y of some sort, right? This is where the complexity really, really happens, and you have to go to lower time frames to even get more detail over here, but you then have a flat X and a zigzag, which is fine for a WXY, as in a sideways double combo. Wave W and wave Y are not allowed to have the same structure, so it has to be some sort of a flat X and then a zigzag, or a zigzag X and then a flat or a triangle in wave Y. But at the moment, with the divergences, which I'll show in a second, it looks like price might want to look towards the downside. If we look at the confluences, the volume profile over here, we are below the point of control. Value area low still here, but has been tested twice already with a double bottom created over here. We do have a triple bottom, 33.2k, low 1, low 2, low 3 on other charts. That's something to keep your eye on, 33.2, and then that key level at 32.5k. If we then look at the CVD, after the stream, that was very, very interesting indeed. After the stream, we started to create more bearish CVD divergences. We started to create bearish CVD divergences over here, first of all. So let me make this line red. And then we came back once more with bearish CVD divergences. So actually I quit the stream somewhere here, just at the beginning when price was moving up. More bearish CVD divergences on the AGGR chart, which was a clear sign at the same level as well that there was absorption going on and price willing to move towards the downside. So here, lower highs on price, higher highs on yellow, bearish CVD divergence. But then here again, lower highs on price, but higher high on blue as well as big higher highs here on yellow, which is a bearish CVD divergence. There's absorption going on. Price moving down, CVD plays out. Very nice indeed. Price going back up. But again, lower high on price, higher high on the CVD consistently, which increases downwards pressure and the potential for price to move towards the downside, taking this low, which is the target now. This low over here at 33.8k, which is this one, which we are incredibly close to taking. So do we have bullish CVD divergences? Yes, we do. We had the bullish CVD over here, first of all, countered by bearish CVD divergence, which played out. Second bullish CVD divergence, again countered by bearish CVD divergence. Then again bullish CVD divergence, you just move to the pivots to the downside, but then again bearish CVD divergences. So constantly you get countered by market absorption or absorption of market longs with a limit short order filling their bags for price to move to the downside, which it would be so nice to take this low actually on the video, but I'm not sure if we're going to get it. But yeah, it just shows that, you know, you read CVD, there's a lot of absorption going on, increasing probabilities for price to move to the downside. So if you then look at the probabilities of the different scenarios, then over here on the medium time frame, the scenario, the probabilities are at the moment still higher for the bullish scenario, expecting at least the double top here to be taken after price potentially falls, still looking for price to move to the highs eventually. Same with the lower time frame, but also I wrote over here till local signs change. So the moment locally probabilities really increase that a high might be and then we look for downside, of course, I make sure to update you. On the micro, currently the probabilities are higher and actually haven't really changed for that bearish scenario to look towards the downside, especially after the stream with also the bearish CVDs increasing consistently, where we have that double bottom. So bearish CVDs after each new bullish CVD as shown, and after a potential low, the probabilities are higher to still go up at least once more. Also for everyone, this weekend I have a 2-day event. This might be the last update before the macro high time frame video of Sunday night. I will keep you up to date in Discord as well as the YouTube community post. But yeah, I have a full speaking event for 2 days as well. So yeah, just so that you are updated. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.